Cartier Resources is a gold exploration company focused in the Abitibi Greenstone Belt, the Quebec portion. Our flagship project is the Chimo Gold Mine, where we've just delivered a PEA and produced an exciting new exploration program over a 15-kilometer gold stretch east and west of the Chimo Gold Mine that we had not had access to in the previous years.
Philippe, good to see you as always. We're going to do sort of end of year roundup, but first of all, I'm slightly intrigued by this jump in share price you saw recently, 8 cents up to 11 cents off the back of the news around our 15 km. What was it? It was on the Chimo Mine project, but what were you seeing there that got people excited?
Well, okay, listen. In the last 5 years, we've actually focused on the Chimo Mine gold project within a 500-meter radius of the shaft and underground workings. And you remember in mid or early 2022, we merged or consolidated all of O3 Mining's ground. Well, what we did in the immediate ensuing year for the past years or not is what we drilled 25,000 meters. We delivered a fourth resource estimate. We delivered a PEA and got to marketing that. But unknown to the the investment community, we also launched a thorough audit of the new ground that we had acquired. And that was about a database of about 800 diamond drill holes that had never been under one ownership before. The difference today is that Cartier was able to take everything that it learned drilling Chimo, geology, mineralization, alteration, structures, like the favorable ingredients, and apply that to our compilation of the 800 diamond drill holes and only pick out the Chimo lookalikes. And so what we announced recently was 11 new targets that have the Chimo ingredients. And those are 11 targets that are spread over a 15-kilometer strike length. That's, Cartier, on that 15 kilometers, Cartier only focused on 25% of that in the last 5 years. Now we have access to 100% of that favorable gold strike. And it's a different game. It's like, all of those historically demonstrated gold intersections barely got tested down to 200 meters by the previous owners, whereas we had been drilling down to a kilometer and a half on Chimo. So we're going to shift gears now and go back into the exciting junior exploration mode, but the targets this time are along strike a proven past producing gold mine where we recently put out a PEA. So it's exciting times. I think, why did the price of our stock jump? Namely, because I think there's a perception that tax loss selling season is finished, at least for Cartier. 2, the recent spike in gold price. And 3, maybe our story is finally landing, that we have a great investment opportunity here in Cartier. Our value proposition is better than ever.
Look, I hope it's the latter, because like tax loss season, as you say, it's an opportunity for people to kind of reassess their thinking and work out where to redeploy capital. Obviously, you may have been the beneficiary of that. That's great, and I think price spike as short as it was. I'm not sure at a time it's going to cascade down to junior explorers, but so possibly the opportunity in front of you at Laurel Lake Cadillac Fault Zone is what kind of rang their bells as it were. But you've got to do something about that, right? So identifying targets come and go, anomalies come and go. You've got a bit of data. What gives you the confidence that you're more likely to be successful, or that it is in some way partially de-risked?
Well, what gives us the confidence is that what we're seeing on each and every one of these 11 targets are really high-grade cores. At Bluegrass, for instance, you're getting 85 grams per ton gold over 4.9 meters. At East Nordo, you're getting 63 grammers over 3 meters. And people remember, at Chimo Mine itself, there was some really high-grade stuff underground that constitutes about 25% of the ore that was mined. So we're seeing on each and every one of these targets, the key ingredient that you need to have to build ounces. and at these high-grade cores. So we're not drilling blind. And, compared to the Chimo Mine program itself, the project area is really inexpensive, high reward drilling. Like, we're talking short holes. And the entire program that we've designed is, I think, north of 140 diamond drill holes that can itself be broken down into much more manageable and less costly individual programs. So that's really what has changed. And we're banking, and our collateral is the Chimo Mine project itself, and the publication of the PEA. We filed the report in May or June, and then obviously we initiated a process and presented the project to a whole bunch of a corporate audience that we didn't have access to before. Now, what we've seen is that these markets have forced a lot of juniors to parade their wares, so to speak. So that's quite busy on that front. And fortunately for us, it gave us the opportunity to look at a whole new dimension of the Chimo Mine project. So walking into 2024, we've got $2.5 million in the bank. We're readier than ready to keep advancing, not only on the shaft area, but on this brilliant new 15-kilometer strike length. And then obviously we'll entertain all the opportunities or alternatives going forward. It may include financing. It may include joint venturing. It may include selling the project outright. I mean, right now we're ready to seize that opportunity. I don't know where the markets are going, but that's what we're doing.
Okay, because here's and I've had this conversation with a few CEOs over the past week or so, which is understand the kind of commercial realities very, very quickly is important. You've got this PEA out on Chimo Mine, just under $400 million, I don't know, 390, something like that, and 21% IRR from memory at presumably something lower, like a 1750 gold price, right? So the payback's quite quick. But this kind of data set that you've been analyzing, and I guess the plan which you're starting to articulate here in terms of how you get after this additional strike length with the quite impressive grades that you've indicated, is how do you progress the PEA, which is, it's good, could be better, sure, we hope. To be attractive, it probably would need to look a little bit sexier. It's like, so how does this new data shape your thinking? Do you just revise the PEA, put any set PEA numbers, or do you spend the time, money, and effort to look at potentially upgrading the whole thing to a PFS with an additional resource in there? How are you looking at it?
All of the above. Obviously, when we shut the fourth resource estimate down, we added 25,000 meters of diamond drilling. So that is going to increase the resource count on the Chimo Mine area, which will modify the PEA. So we could work on that, but we could also work on demonstrating to the people or our audience here that we're not only dealing with one potential mine going back into production, but a mining camp. Now, you alluded to the fact that you're talking to CEOs and cost overruns and the new reality of much higher all-in sustaining costs. It is a new reality. And I think one of the major advantages of Chimo is it sits right near a mining-friendly district with access to qualified workforce and infrastructure, which, can lower your capital expenditures ultimately to develop these things. We're not dealing with a remote project in the high north or in the desert. We're dealing with a project where you can have a lot more control on your costs to develop the project. I think that's one of the key advantages, but one of the bonus here is that we now have access to this 15-kilometer strike where we could basically multiply Chimo by 4. And so an emerging mining camp that could ultimately offer 15 million ounces, that's attractive to any senior mining company.
It absolutely is. And you said a few things there which I think are true. The conversations here also suggest there's a much higher cost structure to mining going forward. I say new paradigm, a new paradox in a way. Where margins are staying the same as gold price moves up, which is great, but it's better than going down. Margins being squeezed, but as we saw during COVID. But you guys have got to spend your money efficiently. You've got to spend it on the right stuff that's actually going to create value, not necessarily do the stuff which the mining sector as a whole has traditionally done. Oh, we're going to drill. We are going to whatever. You've got to know what that thing is, which is going to be attractive to either more, additional strategic partners or new money coming in. So, I know it's all of the above, but have you got a sort of sense of where that value seems to be? The market's telling you that the value seems to be lying at the moment. Where do you put your money?
Yes, if we continue to focus on small increments in and around the shaft versus major leaps forward, just kilometers within a kilometer away or two from the existing shaft, that's what we have to be doing. We have to realize that it is drilling the extension of a pre-discovered deposit that could rapidly grow by multiple million ounces versus adding an extra 200 or 400 or 500,000 ounces at Chimo. We have to pace ourselves through that. Now, keep in mind, if you plotted the past production period of Chimo on a historical gold graph, you would note that compared to today, Chimo is in a totally different economic landscape. It's in a totally different technological environment. I mean, there have been major advances in metallurgy and mining, and it's also in a quite different corporate neighborhood. 25 years ago, the mining companies in and around the Chimo area on the Cadillac were much less sophisticated and numerous than they are today. Today, the price of gold, the mining technologies, and the corporate environment. Like, you have a newcomer in Goldfields when they took over part of Windfall. You have newcomers such as Evolution Mining. You have IM Gold, which is putting the bow on its Island Gold and potentially going to come back into the market and be more proactive. You have Kinross that took over the Great Bear. It's a totally different corporate landscape, and I think it points to the fact that the Abitibi in Canada is still going to continue delivering quality projects and the future ounces. So that's where we have to imagine where we're going to be next, and the work that we have to do has to service that new reality.
No, I hear you, and I must say it's a question of knowing how to react to the kind of move in gold price. When that starts to trickle down, as it were. Can you take advantage of that in terms of access to capital, and knowing how to allocate your capital and how much to allocate your capital? Because you said, I think I'm not quite sure, I can't quite remember the phrase you used, but pace yourselves in the backdrop of all of this these moving variables out there. So what do you think next year is going to hold in store for this story? If people are, if we say, I believe you, I think people are starting to understand what it is that we're trying to do. So what's next year hold in store for us?
I truly think that our share price is going to adjust to the value proposition that we have been promoting throughout 2023. I think new diamond drilling on some of these really high-grade deposits that were discovered by previous owners within trucking distance of the Chimo shaft, that's going to provide exciting news flow. I think revisiting the additional opportunities from the original PEA to further improve the economics of the Chimo Mine project itself, I think those are catalysts moving into 2024. And if the markets aren't there, well, we have a good treasury to weather that storm. So that's my pitch.
Well, it's a good pitch. I'm a buyer. Look, Philippe, I appreciate you coming on for our end of year, little review, but also a little soup of what is to come next. But appreciated your storytelling and what you've been doing in very, very difficult markets this year. Let's stay in touch.
Be well, everybody.